a lot of American VC fund got more and more interested into other markets, including Europe, and which is great because we've seen, of course, we had major shift.
There's definitely a lot more money in the ecosystem than a couple of years ago, and deals have just gotten really, really competitive.
Have you noticed anything in the news in the last week or two that made you pause and think about venture capital, think about investing, think about startups in a different way? Did anything jump out at you in the news and in the news of tech in the last week or so?
In the last 2 weeks, I don't know, but what I can say is that we have a lot of new unicorns in Europe, that's for sure, and a lot of, but that's not only during the past 2 weeks, but since mainly the COVID, what can we see is that a lot of American VC fund got more and more interested into other markets, including Europe, and which is great because we've seen, of course, we had major shift and mentality changes since the pandemic, and I think this is going towards also the rest of the world and not only the US. We all know that the Silicon Valley now was really dense, and some other hubs in the US are getting bigger and bigger, such as Florida or Texas, for example. And this is the same in the rest of the world. So as more and more people are able to work remotely and getting into this startup vibe, let's say, we can see that the rest of the world will be able to move quicker, and more money will be invested in some other zones where we never thought about or never really paid attention. And this is great. This is the future of the startup world and the VC investment, in my opinion.
I love that as a topic. What are the other panelists' thoughts on kind of the up and coming Europe and comparing that to U.S. and Asia? What are some of your impressions that you've noticed? I noticed there's a heck lot of VCs being founded worldwide. I think because there's lots of capital out there, so there's certainly a lot happening.
On that last point about lots of VCs popping up. One of the common themes of conversations that I've had with other VCs, at least in US and Canada, is that there's definitely a lot more money in the ecosystem than a couple of years ago. And deals have just gotten really, really competitive. Good deals are always competitive, but things are just happening faster. Lots of companies raising money. And a lot of them are raising money at very high valuations, and at one point you start kind of questioning, the stage and does the valuation, make sense for the stage of the business, where they are, what they've been able to deliver, comparables, and so on and so forth. So I've definitely seen a couple of deals where it's been competitive, it's been high valuations and whatnot, but a few years ago, people used to say, at least in the Canadian ecosystem, people would say there's not enough money, and that's definitely not the narrative anymore, because there's definitely money and they're finding, the best companies.
I guess I'll touch on another theme that I see a lot of, pre and post pandemic, and I hate to call myself like a follower of this trend, but I think the rise of syndicates is a pretty big story in the VC world. 3-4 years ago, you didn't hear about too many folks getting started in VC by starting their own syndicate and then building a track record that way. Certainly when I went to business school 8 years ago, that was not advice. Like, how do you break into VC? No one said, well, just go do it. Go find allocation in companies and try and get some money in there and work with some other people so that you don't have to put it all in yourself. And so I think it's an interesting trend. I think it's a great way for individuals to get access to deals where they're members of the cap table that have funds that maybe they couldn't get into because there's so much demand. Maybe there's some other ways to get smaller checks into some of these companies. So I think it's a really positive trend. I think it's extending access to the asset class and helping more folks participate in the asset class versus just a traditional institutional model, kind of supporting VCs and then ultra high net worth individuals or high net worth individuals as angels. I think it's a healthy development, and within that, I definitely see a lot of family offices and or angels also saying, I don't want to be in a fund because I don't want to pay 2 and 20. I don't want to pay fund fees. I think there's a bigger push on funds to create value for the fees that they charge their investors, because there are other opportunities to go directly to the company or through SPVs where fees are typically less than 2 and 20. 2% of your assets that you dedicate to the fund being charged every year, and 20% of the carried interest that your investments earn, which can really eat into returns. So I would say that's another area where I just see a lot of shifting, and I think it's ultimately net positive for the ecosystem.